Snipers HQ, where we calibrate the soul. Snipers HQ, where we calibrate the soul. Master the emotion, then we tally back the goal. Confluence rising, look at how the level stack. Sniper discipline, never looking back. Snipers HQ, stay focused.
Yeah, Zo. What's up, snipers? It's your boy Ab, and we're gonna get straight into it. I got a lot for y'all right now. So futures opened up about an hour and a half ago. It's currently 7:37 p.m. Eastern time. So let's talk about what's really going on right now. Mainstream media is celebrating trade headlines, and it's basically about a negotiation, right? A peace deal. But the market is heavily mispricing the actual odds of a durable U.S.-Iran agreement. Traders have priced in an outcome that simply isn't locked in yet, at least for now. And when the streets gets that reality check, this entire synthetic rally from the March 30th low becomes vulnerable to a sharp, aggressive sell-off. And we're starting to see that the futures is starting to fall already. So I've been letting my people know since as of yesterday, I believe. So this whole move, from what I'm seeing, is a complete illusion. And you already know over at ramsoffthecharts.com, we lay out a strict macro watch list. We are currently on phase 1 of our AI build out. So if you don't know, go ahead to the watch list. Restricted domain. I'm not signed in. That's super dope. But if you don't know, you just go to our watch list right here, and it'll tell you the plays that we are in. And I'm not going to show you the plays that we are in. You can go ahead and click that link below in the comments and in the description, and it'll take you straight to what we're looking at. So there's phase 1, and we'll update it when phase 2 begins. But for the real-time executions and live read, I try to keep that in just our Discord, but I have been dropping some on our X. So if you're not familiar, we do have an X now, and our X is called @snipers with an S command. This is our X website, and I'll be updating a lot of macro. Like we had NVIDIA that played out. NVIDIA dropped, and we know why it dropped. So go ahead and check out these articles in here. I'll be giving a lot more updates on here, products and all of that stuff. But as far as like our plays, I keep that in our Discord. And if you don't know, the Discord will be opening soon, very, very, very soon. But I'll let y'all know in a little bit. I'll let you know exactly when the Discord will be opening. All right, so let's go back to futures. So I've been risking a precise amount to avoid over leveraging my account, and you can find that using Snipers HQ Risk Console, and that's in a link below as well. And if you don't know anything about that, just click the link below and you'll see this is exactly what it is. It gives your position sizing, how much you're risking on a trade, and all of that good stuff. So it's a mandatory risk calculator built so every trader in the network knows exactly how much capital they're going to put online before even entering the position. It's super, super dope. If you don't got that, go ahead and get that now. It's only, I believe, $32. Only $32. So hurry up and jump on that. And then I have a lot about Walsh, basically, and other stuff. So let's see real quick futures, what we looking like. So we're looking for the retest down there, 7,522.50 ticks. And buyers want it to bounce there, right? If it doesn't bounce there, buyers need it to bounce here. And that's going to be 7,510. And if you lose that, now you're at risk. Now you're headed towards the 7,493 level. But that's just the 20-day on the 4-hour. But if we lose our $7,509 level, we're coming down to our 10-day moving average of $7,461. And yeah, it's not going to be too good. And I'll touch up more on SPY in a few, but I want to tell you about this wash thing. So, because it gets deeper, right? So, while the U.S. markets was closed for Memorial Day, tensions around Iran and the energy corridors were still building in the background. Reports of renewed instability along the region are already starting to fade the peace deal narrative, right? And I actually put in my channel about the other day I had put in here. So where was it? It might have been okay, so it was the 22nd. Exactly what I'm still holding on the June 5th SPY, 680 puts. The market had to completely exhaust its upward momentum at the 748 expected move wall to clear the area. Now that opening short squeeze has fell right against the upper market maker limit, the stagflationary decay. Yesterday's record private credit defaults in the 0.4 Philly Fed manufacturing could start applying structural. So I had put something somewhat in there, but I think it was general where I really went in and put about basically me not believing this hype. So it was general, but I just did one today. I just put that in there today, updating my people about this skeptical or sketchy move that's going on right now. So it's very sketchy. On Friday, Kevin Walsh officially took the oath as Fed chair, stepping into a central bank that is boxed in by inflation pressure. With wholesale inflation still running hot, the Fed doesn't have room to pivot without risking dollar stability. Higher for longer is not a narrative anymore. It's the baseline. It's the reality right now that we're facing. And Walsh already dropped the key signal that Wall Street is ignoring, and it's not good. So do you want to know what it is? If you want to know what it is, make sure you like and subscribe right now, and I'll wait for you because I'm not going to tell you until you like and subscribe right now. You ready? All right. So, wait, did you? You tried to trick me. Nah, you tried to trick me. Go ahead, like and subscribe first. Okay. Well, so thank you for that. Walsh said he wants to run the Fed with an Alan Greenspan style approach. What is that at? So let's be clear what that means. Under Powell, the Fed held the market's hand, right? For forward guidance, dot plans, constant communication. The market got conditioned to predict everything in advance. Greenspan did the opposite. Deliberate uncertainty, right? Keep the market guessing. Never fully show the next move. And Walsh is signaling that same shift. That's big. That's real big. More internal disagreement, more unpredictability, and less Fed transparency. That changes the entire volatility structure of this market. Because now that you got SPY sitting near highs, retail fully conditioned to buy every dip, and the Fed chair openly leaning towards surprise-driven policy instead of guidance, that is a different regime entirely. So when you combine that Fed shift with geopolitical pressure around Iran and energy markets, traditional retail indicators start breaking down. That's not an environment where you blindly trust like lagging moving averages at all-time highs. You don't want to just trade using only moving averages. I never trade just using my moving averages ever. They have to have two other confluences at least. I need 3 confluences to take a trade. So that's why we focus on hard data. Right now, our internal models. So we got the hold on now. we got the Sniper HQ risk console, and it told us this at Friday kill zone, but I know not to take the move. Why? Because Wells are still heavily they're hedging this rally, right? So we're tracking the $750 on SPY as a major structural ceiling. That's the resistance. I believe that's the top. Options positioned heavily towards that area. It's going to serve as like protection. With puts are massively outweighing calls right now. So big money is not chasing a rally. They're hedging into it. Where the DP flow was at 2.29 PCR, now I think it's at 2.21. But let's see how we open tomorrow. So that's basically the dark print flow, and that's telling you the underlying open interest of the put to call ratio for SPY. So this entire move has been fueled by thin liquidity and dealer hedging flows, not conviction buying at all. This is not because we was closed and you see we was pumping crazy. It was no big money in the market at all. So when full cash session volumes come back in and price runs into that ceiling around that 750, dealer positioning can flip fast, forcing hedges to unwind and adding pressure back into the tape. That's where the mechanical risk comes in, right? We focus on at the Snipers HQ, we focus on structure, volume shelves, and points of control, and dealer gamma exposure and macro. And that's exactly what the Snipers HQ risk console is built for: position size and risk control, and structure-based execution in volatile conditions. So again, if you don't got the risk console, you're doing yourself a disfavor. Go ahead and click that link below and get you that. If you want access to the framework, all the links is below. For the X, for the ramsoffthechart.com. And if you're tired of guessing off of headlines and getting caught in liquidity trap, I really suggest you go ahead and check out that website. It's super dope. So we even got here exhaustion 750, snap is 731. We'll hit that by May 22nd to May 26th. We did that, and then I said $731.74. We'll get a fake we'll get a relief bounce, and retails will get trapped in that. So let's see how it goes from there. So we're gonna look at SPY. I want to show you this news that we're dealing with right now. Look at this. U.S. strikes concluded for now. So U.S. military will protect forces while exercising restraint during ceasefire. U.S. military protect. Okay. U.S. forces conduct strikes in southern Iran in self-defense. That happened less than an hour ago. U.S. carries out defensive strikes in southern Iran Monday. And then we seen. What else did we see? Reports Qatar offer Iran $12 billion to secure agreement are baseless. We seen loud explosions heard around the Strait Hormuz. Explosions heard in Iran's Bandar Abbas city. Reasons unknown. We also seen rocket attacks hit Iranian opposition camp north of Iraqi's Erbil, wounding 2 fighters. IDF struck more than 70 Hezbollah sites across Lebanon. So we're starting to see that war come back in. And I was telling my people exactly what I'm telling y'all now. The market is aggressively mispricing the reality of durable U.S.-Iran peace pact. Right now, the market is pricing in a permanent diplomatic resolution that is fundamentally unlikely to materialize. Once the headline fades, the holiday headline fades, the traders are forced to face reality. The market is primed for a vicious liquidation event that could give back the entire rally from the March 30th lows. The streets has brought into the illusion. Total open interest, put the call ratio for SPY is heavily skewed. Put options interest for the near term weekly cycles is sitting near extreme levels. Recent upward momentum was mechanically engineered by market makers buying underlying stock shares to hedge retail put selling. As those contracts hit the theater window this week, dealer algorithms will be forced to forcefully unwind those positions by dumping hedge shares back into the tape. The second the fragile ceasefire fractures and U.S. combat operations resume, the market will be forced to aggressively reprice the board. A resumption of hostilities means the market instantly prices in soaring crude oil structures, spiking treasury yields, and supply side inflation expectations. The synthetic futures pump will face raw macroeconomic gravity. That was at 10:43 a.m. before anything of any war, right? And then we got hit. Boom. U.S. forces conduct self. I'm what the game's been missing. Check that. But go ahead and listen to that. This Joel Santana album. Super fire, super fire. Yeah, I'm not gonna say it because I don't want y'all to pick up on that. That's for my people. So let's go ahead and look at SPY right now. So I believe the top is 750. If we pass that, still be looking for that top around that area. Let's see how we gap up early in the day. What I got, 757 overall up there, so that's possible. 757 is possible before we break down, but let's see if that 750 area holds. That's that red trend line up there. I'll be looking for, if we do reject there, I'll be looking for SPY to come back and test that 742, 741 area. SPY doesn't want to lose that 741 area. If it loses that 741 area, very well, we're going back down to 735, then back to 732. And we lose that 730 area, we're looking at 710. So that's what I got for SPY. Meta. Let's see. Meta is still forming that base here. Like I said, it's getting ready to test that $635 level. But Meta has to get back above 670 for starters, the 200-day moving average. 670 is where you got to get above. And then you got that $682 level. That's super. Sellers are super aggressive there. Right now, we are in sellers territory. So don't even try to force yourself to get in on that action. If you're looking for shares on Meta, you can scale in lightly here. It's very possible we see 565 and then 528 again to the upside. Let's see if we can get above 637 for Meta. Amazon. So for Amazon, I'm not looking for us to go really too much higher. We could see 271. Let's see how we react there. If we break that, I see $273. But if we lose that area, if we lose 265, we're coming down to $258. And then we got $250 that I've been screaming out for a minute now. So let's see what we do there. Google. Google looks like it wants to come back down to $345. So let's see what Google does there. It got $353. If it can't hold that, then we got $345. Right now, it's already trying to break. If 381 doesn't hold, we're very well coming down towards that $353 level. To the upside, say it does hold the 381 level. Overall, I'm looking for 437 on Google, but I wouldn't get in here at the top. For Microsoft, it's still pinned between our 100-day and our 200-day. You need it to get above $443.25. Our AV WAP is right there with the 100-day. It has to get above that. You're building the bull flag right now. Let's see. If it loses 384, it's coming down to that 358 area. You got an inverse cup and handle here forming, or a possible head and shoulders, however you want to label it. 358 has to hold. If it breaks that 358 level, look for Microsoft, you heard it here first, to come to $333, right? And if it loses $333, look for it to come to $300. If it loses that, look for $280. Let's look at Tesla. Tesla is rejecting up here. It looks like Tesla is going to pull back some. Let's see if Tesla can hold $367 level. Because if it loses that $367 level, it's coming back down to that $328 level. Let's see if buyers step in again there. If they don't, then we got $300. To the upside, if it can manage to hold that $420 level on Tesla, you can see that 450 again. We did hit that. We have 450, then we got 465, and then 490 on Tesla. What am I missing? Apple, Nvidia. Okay, Apple going crazy on the monthly. Let's see if Apple can hold $303. Because if it loses that, we're looking at that $300 level, and that $300 level needs to hold, or you're going to $290 on Apple, and then you'll see we'll start tapping in at that $290 level. Because if you lose that, you could start slipping quick, because it didn't build no real structure here. It just went straight up. No structure. I don't like seeing those in stocks. I try to stay away from that. So then, now we got this Nvidia at $215. It needs to hold $208. See, that $215 looks like it's about to lose that. If it loses that, $208. And then I got $198 on the video. But I had the last video, what I say, you lose don't quote me on this, what was it, 221, then we got 213, and then 198, I believe. It has to hold 220. I don't know if I see it holding that 220 level. I wouldn't be surprised if it doesn't hold that 220 level. Yeah, don't just assume that it will, because it very well can just break down. All right, so that's what I have for Nvidia. So overall, you can see this market is really fragile, to say the least. I don't really like what I see at all. I'm like, the way that I'm hedging my account is sorry about that. I'm in energy. I'm shorting like the consumer area with UAA and credit defaults with BIZD. I don't believe in this market right now. This market, I don't like what I'm seeing. I'm in the SPY short. I'm energied out. I got a lot of energy. So yeah, make sure you like and subscribe. And yeah, so I can tell you one more. So right now, I already told my people, so yeah, I can tell y'all now. I found the AI bottleneck. It's TE, ticker TE, and I'm looking to get it in between $6.20 to $6.80. Yeah, that's what I'm targeting, for sure. I love that area for this right here. And yeah, go check out our articles on X that'll break down, like, I have a whole bunch of stuff that I keep dropping. So just make sure you follow that page as well, so you could get briefed on that and everything that's going on. And I leave everybody in the words of peace be upon you. And in Arabic, we say assalamu alaikum. Peace to the gods, peace to the goddesses, peace, love, light, and healing. And the highest human act that you could possibly achieve is to inspire. And then I'll leave you off with, would you rather be at war with yourself and at peace with the world, or at peace with the world and at war with yourself?
Stack, sniper discipline, never looking back. Snipers HQ, stay focused.